kicking in about $3,300 every month to fund the operation of the site. But you know, it seems like he didn't even make money off of it. He posted that the site was costing at least $4,000 a month just to keep online. So.
God, it's just crazy.
It is a really terrific read, and we really appreciate you bringing it to us. William Turton is a cybersecurity reporter for Bloomberg, and as Joel Weber, our editor of Bloomberg Businessweek, pointed out, has just been doggedly pursuing this story, and really just some terrific reporting and writing by him and Joshua Brustein. So check that out in the latest edition of Bloomberg Businessweek. You can also find it on the Bloomberg terminal, of course, and at Bloomberg.com.
I'm going to put it on Twitter because the detail in it, in terms of William's reporting, is just unbelievable. Just a lot of specifics on how this all came to be. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you are listening on Bloomberg 106.1 in Boston, though, Bay State Business is coming up next. Coming up next, we're going to check in with our own expert when it comes to COVID-19, Michelle Cortez. She will check in with us about Eli Lilly's news and where we are when it comes to COVID-19. That's coming up right here on Bloomberg Business Week. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Fed Day, Wednesday, October 7th. The Dow, the S&P, and NASDAQ at or near session highs. Some central bankers sought further debate on the future of the Fed's asset purchase program when they met last month, signaling they'd be open to altering or increasing bond buying going forward. Policymakers agreed at the meeting to hold rates near zero until the labor market reached maximum employment and inflation reached 2% or was on track to moderately likely exceed that goal for some time. Stocks clawing back the decline triggered by President Trump's suspension of stimulus talks yesterday. After today, he backed a piecemeal approach to aid, and investors took a longer-term view on a spending program. Treasuries and the dollar fell. The 10-year yield right now 0.78%, down 14.30 seconds. The Dow, the S&P, and NASDAQ all higher across the board. S&P up 61. That's a gain of 1.8%. The Dow up 559, up by 2%. NASDAQ up 212, up by 1.9%. Gold up 0.4%, 18.86 the ounce. West Texas Intermediate crude down 1.9%, 39.91 a barrel. Lilly has asked U.S. drug regulators to authorize emergency use of its experimental COVID-19 antibody therapy after data showed the treatment reduced hospitalizations. The Indianapolis-based pharmaceutical giant says it approached the FDA for authorization of the treatment it's developing with Canadian biotech AbCellera Biologics. Dave Ricks is Lilly's CEO, and he was asked about the medicine right here on Bloomberg Business Week.
And what this medicine does is it knocks down the virus, kind of gives your body a jump start on its own immune response, and so that patients don't get into this challenge where the virus is spreading faster than they can conquer it. It's sort of a turbocharger for your own immune system.
And we are seeing Lilly shares up now by 3.6%. Airline stocks rallying on optimism about stimulus. UAL up now by 4.5%. American up by 4.6%. Delta up by 3.6%. Southwest up by 2.9%. Stocks higher. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, so Jason, we've heard time and time again from the Fed and Fed Chief Jay Powell about COVID-19's impact on the economy and how the longer the pandemic goes on, the longer we're going to feel that economic impact. So we heard from the Fed again, and we know that they are watching the virus and maybe some stimulus. But you know, we want to kind of dig a little bit deeper into the virus because in today's Business Week economics, understanding our economy means understanding where we are in the virus. Bloomberg News health science and medical technology reporter Michelle Cortez is joining us now, and she's on the phone from Minneapolis. Michelle, it is great to have you here with us. Jason and I, when we were kind of watching the day's news, we're like, we got to check in with her. First of all, Eli Lilly, we talked with the CEO. What do you make of that development?
It's great news for Americans and people across the world that these antibody therapies are coming to the market. It is a logical step that what they're making there is these monoclonal antibodies, man-made versions of what your body makes naturally. So biologically, it makes a lot of sense. And now we're getting these study results that actually show that it does reduce the risk of hospitalization. And as we have longer studies with more people and watch them more closely, we'll probably be able to find out whether it actually can head off deaths as well. So I think it's great that we're getting some really potentially game-changing therapies on the horizon here.
And so, Michelle, and we put this question to Dave Ricks over at Lilly himself, and obviously he keeps track of what his competitors are doing and his colleagues across the market, but you keep an eye on that with an especially keen eye, and I do wonder what the context is, what the broader context is, especially in light, and Carol asked a really good question of Dave Ricks, given what we saw with the president and how public sort of all the different treatments were, where are we holistically in fighting this at this moment in October 2020?
We are still really early, actually, in fighting it. I would say that these monoclonal antibodies, which we don't yet have, right? They just only asked for approval for them, is the first thing that's going to be really definitively, or that has a shot at being really definitively able to change the way that the outbreak runs through the country and through the world. I mean, of course, anytime you have something that's new, whether it's some kind of like a car accident or just any treatment, once doctors have seen it a lot, they get better at knowing how to treat it. So things like proning patients, making sure you put them on a ventilator early or late, giving them a drug like dexamethasone, they've gotten really great at fine-tuning the therapies that we have. And they did add remdesivir, which is, adds a little bit for sure, but it's not, remdesivir is not a super big game changer for the entire outbreak. These antibodies, we don't know for sure because we don't have the really big definitive trials, but they have a shot at really making a difference.
And
that's only one thing, right?
Right.
One.
Yeah.
Right. And I guess what's interesting too, Michelle, is that, these are ultimately therapeutics and sort of a bridge, as it were, to a vaccine. And Dave Ricks talked about it being, used in a prophylactic sort of way in a setting like a nursing home and whatnot. But I do wonder, when we think about sort of our own daily behavior, our economic behavior, ultimately at the end of the day, what are you seeing out there from a medical perspective that could actually change the way day to day we live our lives, or what we're candidly able to do for work and otherwise?
Yeah, I mean, there's just not a great answer to that, because the answer is the same thing that we've had before, which is masks and social distancing.
Mm-hmm.
Like, those are the things that can actually make a difference in terms of your own individual safety and the entire environment. When you think about these monoclonal antibodies, I think it's so interesting. Everyone's talking about it as a bridge to a vaccine and all that sort of thing. These are difficult to make. They're not going to have them huge numbers. And it's not a pill. Like, you can't have it in your house in case you're exposed to someone or you think you might have been in a risky situation. They're infused. So you have to be, getting an infusion in a doctor's office or a hospital or something. In a nursing home, you could do it. But it's not like something for you and I to do casually on our own. It's not, some kind of a normal prophylactic, the way that we think about prophylactics that are easily available. Masks though are. Masks and social distancing. Even vaccines are not going to be, a slam dunk.
Well, so, gosh, you do see the big picture, Michelle, which is why we love to talk to you, and so that we kind of make some sense out of the headlines. And you said, this is great news that we're, finally getting to, potentially some game-changing therapies when it comes to treatment. But when it comes to getting the world back to normal, is that still something that we have to be really patient for, and that it's still more like a well into 2021 story?
100%. If we get this under control well into 2021, we're in good shape. I think this time next year is when we should be having these questions. Like, that's the honest answer of when we're going to know.
Is it just because we don't really quite yet have that treatment, or we're really close, but then it's that whole ramp up?
Well, you asked though about the general country, right?
Yeah.
Again, this treatment and these innovations that they're having, that's really great for the high-risk people, the people who are on the margin, the people who we're really concerned about. The President of the United States is a great example, right? Older, overweight, not terribly physically active, definitely was exposed, early infection. Those are the kind of people that you're going to want to make a difference for. But that's not you and me, right? I mean, nobody's going to be putting me in a hospital or in a helicopter and taking me to a hospital if I start showing signs of coronavirus. You have to, wait and see how the person responds to it before you start using these big guns. So for the average person, next year.
Yeah, which is part of the reason why I think a lot of people reacted the way they did to the president, saying and tweeting, don't let it dominate your life, because the course of treatment that is available to the president of the United States versus an everyday person, kind of a different game. All right, Michelle Cortez, thank you so much. You deliver as always. We really appreciate it, covering all things virus at the highest level for Bloomberg News. She joined us on the phone from Minneapolis, Carol.
She has a great story about the VIP medical care.
Yes.
About it doing more harm than good. I have to say, that story has just stayed with me this whole week, about the pressure that was probably on the president's doctors, right, to do something, and that, not necessarily creating that mixture of treatments is always the smartest thing.
Reminded me of season 1 of Succession. Do you remember that? When he goes into when Logan Roy goes into the hospital and all the kids are there and he's saying things. It's pretty remarkable in any case. All right, let's get down to Washington now and Nancy Lyons. Hey, Nancy.
Hey, Jason. House Speaker Nancy Pelosi says she is willing to go back to the table to discuss another round of stimulus now that President Trump is backtracking from yesterday's tweet calling off negotiations. Pelosi, appearing on ABC's The View, said maybe the president's medication caused the reversal.
There are those who say that steroids have an impact on people's thinking. I don't know, but there are those healthcare providers who say that. Also, if you have the coronavirus, it has an impact as well.
Nancy Pelosi will join Bloomberg Radio and Television at noon Eastern Time tomorrow. 2 British men accused of being members of Islamic State who beheaded Western hostages are on their way to the U.S. to stand trial. Assistant Attorney General for National Security John Demers says the suspects are Alexander Cote and El-Shiva El-Sheikh.
Cote and al-Sheikh were members of the notoriously brutal ISIS hostage-taking cell that became known as the Beatles, a name their captives gave to them because of their British accents. The defendants are charged with terrorism offenses related to hostage-taking and killing of 4 Americans, as well as citizens of Great Britain and Japan.
The 4 American victims were Peter Kasich, Kaylee Mueller, Stephen Sotloff, and journalist James Foley. The sale of what's believed to be one of the world's most complete Tyrannosaurus Rex skeletons was expected to fetch around $8 million during yesterday's Christie's auction, but a bidding war smashed that estimate.
$27,500,000 and sold.
Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser, and we're going to talk some green coming up in a minute. And, you know, it's interesting, sort of bridging the politics and the climate discussions. I feel like climate is coming more to the fore, and it was interesting to hear former Vice President Biden talk about it in last week's debate. Yeah, that was a week ago, by the way.
It was a week ago.
Everybody, it was not 6 months ago.
Could it be, Jason, the climate getting hotter and hotter? Could it be everything melting up in the cold regions of our world? Could it be the fires? Could it be the increasing water levels and water tables rise? Oh, wait. Oh, should I stop?
I love it when you talk to me like this. Really makes me feel good about myself. Yes, no, you're right on all counts, but let's also be honest with each other.
I'm off my soapbox. Yes.
Carol.
Yes,
that, this is an issue that I think, especially in the pandemic, I think people sort of maybe shunted to the side a little bit until folks started to, I think, realize and say out loud, these are all connected. And especially, I think, when you look at it through the lens of inequality, in many ways, you see how people who don't have as much, people who have been left behind, are disproportionately affected by these major global crises, be it a pandemic or be it climate change.
So, having said that, great story on the Bloomberg. Joe Biden is apparently considering creating a special White House office led by a climate czar to coordinate efforts to fight global warming if he is elected president. This is according to folks in the know. And among those being considered maybe to head the operation, former Secretary of State John Kerry. He helped broker the Paris Climate Accord. Jay Inslee, governor of Washington.
That was his whole deal, Jay Inslee. The whole reason he ran for president was to put this issue to the fore.
Yeah, it's an important issue. And you're right, Jason. Like, we are realizing slowly but surely all of this is connected. And so this is why these are important issues. All right, you're listening to Bloomberg Business Week right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ all push higher. We're at or near session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are rebounding after yesterday's sell-off, with the Dow currently up 583 points. S&P's gained 63. NASDAQ climbs by 218. The U.S. 10-year yield at 0.78%. Gold trading higher by 8. And transports rise 329 points, helped by gains in the airlines. Among the main 11 S&P sectors, all were in the green, led by gains in materials, consumer discretionary, and the industrials. And leaders to the upside in the Dow, Salesforce, Boeing, and 3M. After earnings, Levi's rose as much as 14% before pairing gains. And in other news, activist Dan Loeb wants Disney to halt its dividend to fund its streaming business. Wrapping things up, Chevron has overtaken Exxon as the largest oil company in America. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it's time for Bloomberg Green, and it's brought to you by PGIM, the investment management business of Prudential, committed to better outcomes for ESG investments. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. Carol?
All right, so Jason, we may hear tonight at the VP vice presidential debate about the two camps' views on climate change. In today's Bloomberg Green segment, the people who have a say on the Biden campaign's climate stance. We want to get into that. It's always good to know the players. Here with more on that, Bloomberg News senior climate change reporter Leslie Kaufman on the phone in Long Island. So, Leslie, good to have you here with us. It's such an important topic, and we kind of do hope it comes up at the debate, because as we know, whether it's virus, whether it's the world at large, the economy, like all of this stuff, climate change, it's all connected. Tell us a little bit about your story.
Yes, absolutely. And hello, and Carol and Jason, good
Hi.
to be here.
Hi.
So what we're looking at in this is really who will be whispering in Joe Biden's ear should he be elected. Obviously, that's still a big if. But Biden has a very ambitious climate plan, probably the most ambitious that any candidate has put forward. He's promised to push the country towards 100% clean energy generation by 2035 and to invest $400 billion in clean energy innovation. But while that is a great and specific plan, a lot of how that will be implemented and the speed will depend on a lot of choices he will be making going forward. So we have outlined who are the people who are close to him and will have some sway in that, and what the different camps are in terms of interest.
And what's interesting, Leslie, is to think about sort of the who here, right? In the sense that, you know, as many people point out candidly, even President Trump, his opponent, Joe Biden's been around for a while. He's been around Washington. He has seen, you know, sort of this debate, you know, build over time. Obviously, the vice presidential nominee, Kamala Harris, comes from California, where climate is a huge issue. So how does this sort of kitchen cabinet, which could turn into an actual cabinet, sort of get put together? And who sort of has the loudest or most influential voices?
Well, it's a real balance. On one hand, Biden has had a very long history with the unions. He sees himself deeply in his soul as a union working man kind of a guy. And that has given some weight to some people like Lonnie Stevenson of United Electrical Workers, who is frankly fine with every form of energy. So he is pro-fracking, and he is pro a lot of things that make some other people very uncomfortable. So Lonnie is on one side. On the other hand, you have people that have the progressives. And when Joe Biden came into the election, he was much less radical than Bernie, but Bernie's people joined with Biden on a climate task force, and they moved him quite a bit in one direction, much more to moving quicker on clean energy. So those are sort of two different poles. Biden also has some very big clean energy donors. He signed a pledge not to take fossil fuels. fuel money. So he's got to go to the clean energy donors. So there are a lot of people putting pressure on him from different directions.
What does it mean, though? He didn't support the Green New Deal, and that came up certainly in the debate between Biden and Trump. So I do wonder what that says, or have we seen any signs in terms of the people that he aligns himself with that say, well, but he is open to maybe some of their initiatives?
Right. I think that was a flashpoint moment, and he doesn't want to be associated with the Green New Deal because it's been painted as pretty toxic by the other side, and he's very much reaching as a moderate. That said, I think there's fairly universal agreement among environmentalists and climate activists that Biden's plan is the most aggressive climate plan they have ever seen. And while it could be a little slower, or a little faster, everyone agrees that as a whole, it is a huge improvement over anything we have certainly right now.
And it's interesting, Leslie, and we were talking about this just a few minutes before we brought you on. You know, when you think about even the primary debate, even thinking beyond Bernie Sanders, you think about Tom Steyer, you think about Jay Inslee. I mean, there were some, pretty loud voices and I think in many people's minds, very persuasive voices from different parts of the spectrum on climate. It did feel like it had a place, especially pre-pandemic, at the table when it came to, kind of getting through the primary process for the Democrats.
It did. In fact, recent polls show that climate is an issue that is the number one issue for a lot of Democrats. So it absolutely has much more primacy this election than it did previous elections. And Tom Steyer and Jay Inslee have not gone away. Jay Inslee gets on the phone and was very influential with Biden in shaping the original climate plan. Tom Steyer not only gives, of course, money, but he is on Biden's climate engagement task force out there making the case for Biden every day. So those people have not gone away.
I also think what's interesting, I mean, man, your story is just chock full of notes and people. We just got about 25 seconds. Bruce Reed, that's a big one, right? Biden's chief of staff?
Right. Yeah. So the people closest to Biden actually have some real climate. Biden hasn't always been a climate guy, but some of the people close to him certainly are open to it, and that includes Bruce Reed, his former chief of staff, whose father was an environmental lawyer.
Yeah, so
right?
interesting.
You are who the people you surround yourself with.
Totally. And I mean, one of the things we know about the former vice president, he tends to collect people, and and he has been around, as we say, a while. Great reporting. Thank you so much, Leslie Kaufman. Nice to catch up with you, senior climate change reporter for Bloomberg, joining us on the phone. And a nice story. Check that out. You can read more stories on climate news, science, and the environment. Just go to Bloomberg.com/green. You're listening to Bloomberg Business Week. Got the chart of the day coming up next. It's Bloomberg.
D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Massar, Jason Kelly. Jason in his T-shirt, me in home in my jeans.
Yeah, it's the way
and
of the
other
world.
things.
Yeah, exactly.
You get more than just a T-shirt. I
I'm
have more
also
than
wearing
just jeans on.
Yeah, there we go.
I've got a shirt.
Anyway, Dave Wilson
Sorry.
is going to be along in just a minute with his chart of the day. A little wacky Wednesday going on, but first, Charlie Pillett. Hey, Charlie.
Well, hello there. I'm in the office. Let's begin with a developing story headline out of the White House. President Trump is in the Oval Office working. This, according to a pool report saying the president is being briefed on stimulus talks and on the hurricanes. Stocks right now, they're at a more than 1 month high. We've got 28 minutes to go ahead of the closing bell. Stocks advancing on renewed optimism that lawmakers could still reach an agreement on additional stimulus. Treasuries and the dollar fell. Let's get right to the numbers. 10-year yield now 0.79%, down 17/30 seconds. S&P up 62. That is a gain of 1.9%. The Dow is surging 570 points, up 2%. NASDAQ is up 214, up by 1.9%. Gold now at $18.85 the ounce. That's a gain of 0.4%, up 7.77 the ounce. And West Texas Intermediate crude holding right at $40 a barrel, down 1.6%, lower now by 66 cents a barrel. Eli Lilly is asking U.S. drug regulators to authorize emergency use of its experimental COVID-19 antibody therapy after data showed the treatment reduced hospitalizations. Lilly shares, they're now pushing higher, up by about 3.6%. And activist investor Dan Loeb is urging the Walt Disney Company to permanently suspend its dividend and redirect those funds to acquiring and producing content for its streaming service, Disney+. Disney shares, they're up by 1.8%. 3:33 on Wall Street. Time now for the Small Business Report with John Tucker.
For the past 35 years, Michelle Husselby has operated the Sharon Dance Studio in Sharon, Massachusetts. Well, the pandemic forced her to close back in March. She was able to open back up only a few weeks ago. Michelle joins us this morning. Michelle, I understand you were preparing for a big recital when the pandemic took hold.
I think the hardest part was there was just no closure for the kids. Like, there was no ending. We didn't end anything. It just stopped. Some of the kids were great. We did Zoom for 2.5 months, I think. And some of the kids were great with it. Some of the kids had a really hard time.
Can I ask you how your revenue was impacted and how were you able to hang on?
Well, I think part of it is because I'm lucky that my studio's in my house. So that was huge. I think the biggest downfall in the revenue was I had a lot of very young children. And a lot of the younger parents are very, very scared, which I understand. You know, they've canceled everything for their kids for the whole year. The biggest hit was really not doing the recital because, you know, that's the biggest thing we do all year. And the recital, and we couldn't do summer camp. You know, it's probably like, a good 30% hit, 40% hit in my enrollment.
Michelle Husselby, who operates the Sharon Dance Studio out of her home in Sharon, Massachusetts. Thanks and best of luck. I'm John Tucker, and that is your Bloomberg Small Business Report.
And we thank you very much, John Tucker. One additional economic note, the Federal Reserve reporting consumer credit dropped in August. Credit card balances falling for the 6th month in a row. Recapping, equities higher, more than 1 month high now, with the S&P up 58, a gain there of 1.75%. I'm Charlie Pellett. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
Oh, I know why you're doing this. Right? Eddie Van Halen did the guitar solo on this for Michael Jackson. Yeah.
And the song is?
Beat It.
Beat It.
Beat It. I have to say, this album, this is Thriller, right?
Yeah.
Yep.
That album was like unbelievable.
Yeah.
It
was.
Yeah.
It was. Complicated to say the least. Legacy, but
yeah. I was going to say, no matter how you feel about
taking it just
Yes.
musically, game-changing in many ways, for sure.
One of the biggest selling albums ever. Yeah.
Dave, are you telling us to beat it? Is that what's going on?
Not at
Dave.
all.
Okay,
I'm
just
telling you
checking.
to beat it.
All right.
I will say, Dave, and I know that we're squeezed on time a little bit, but like the tributes to Eddie Van Halen have really been incredible to see, don't you think?
I mean, just all over the place, you know. And it's understandable. I mean,
Yeah.
Rolling Stone a few years back had their list of the greatest guitarists. Eddie Van Halen finished in the top 10. So
Yeah.
it just goes to show you how innovative he was.
But I don't feel like when people start talking about great guitarists that they'll talk about Jimi Hendrix, they'll talk about Clapton, they'll talk about a few other, right? I don't feel like he automatically comes to mind, and yet he was pretty incredible.
And he should be in
it's a
that
matter of his
conversation.
era because, you know,
Yeah.
when you talk about Clapton and Hendrix, I mean, it's the 60s. Eddie Van Halen, the 70s and the 80s,
Yeah.
different eras. So that's the reason as much as anything. In any case, we're talking about something beating something else. Well, if you look at stocks, I mean, the U.S. has been beating a whole lot of the world ever since share prices hit bottom back in March. But you're not seeing that when it comes to the kinds of companies that investors buy for dividend growth. And you know, this chart is based on something I saw it on Twitter yesterday from Michael Guy, the editor of the Lead Lag Report. And what he did is he compared dividend growth exchange traded funds that track U.S. stocks and international stocks. We're talking about the ticker DGRO for the U.S. and IGRO internationally. And while if you compare it, say, to Russell 2000 versus the MSCI EAFE index, so a way to get sort of the broader market look, I should say the Russell 3000, that's the broadest gauge they have. You see that over the last 6 months, in general, U.S. stocks have done relatively well in global terms. The ratio between the Russell 3000 and MSCI EAFE ETFs was up 4.3% through yesterday. Make the same comparison, though, with the dividend growth ETFs, and you find the U.S. has actually been trailing the rest of the world. The ratio between the two ETFs down 6.4% from its high in March through yesterday. So, and that got me wondering why. Well, if you look actually at the U.S., it's what's called the iShares Core Dividend Growth ETF. I mean, you see, Apple and Microsoft in there, but they have much less of a weight than they do in the S&P 500. And then you know what you don't see in there? Big tech companies with no dividends. Amazon.com, Google's owner, Alphabet, Facebook. So it goes a long way to explain the contrast that shows up in this chart. And if you want to know more, folks, send me an email. I get the chart to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Who's your top 3 guitarists of all time, Dave?
My top 3. Well, I mean, Hendrix has to be right up
Yeah.
there, if only because he was an innovator in the 60s in the same way that Eddie Van Halen was an innovator in the 70s and the 80s. No question. They really deserve to be sort of up on the same plateau, you might say, among guitarists.
Yeah, I bet John and Carol fame would vote for Clapton, right?
Yeah, he's totally into Clapton. He's also, though, like John is very into like Les Paul and stuff.
Yeah.
Just so there's some,
Oh, absolutely. Les Paul was such an innovator. I mean, he actually made the instruments, let alone figured out how to play them.
Exactly.
Yeah, amazing. All right, Dave, we'll catch up with you after the close of trading. In the meantime,
I
down
love talking
to
music with
D.C.
David.
and Nancy Lyons. Hey, Nancy.
Hey, Jason. Vice President Mike Pence and Senator Kamala Harris will face off in a debate being held in Salt Lake City tonight. Bloomberg contributor Rick Davis says Pence will need to discuss the pandemic since he was in charge of the administration's coronavirus task force.
This administration has not liked to address the COVID virus problems associated with health. They don't mind talking about the economy, but the health aspects are going to be the toughest part for Pence to navigate tonight.
President Trump's physician says the president has been symptom-free for 24 hours and his vital signs remain stable and in normal range. In a memo, Dr. Sean Conley says the president told him he's feeling great. In fact, the president is actually in the Oval Office this afternoon for a briefing. A federal appeals panel has blocked President Trump's latest bid to keep his tax records out of the hands of Manhattan's district attorney. Bloomberg's Nathan Hager reports.
In a unanimous decision, the 3-judge panel rejected President Trump's claims that DA Cyrus Vance's subpoenas to his accountants are overbroad. The court says Vance has agreed that President Trump may appeal the decision to the Supreme Court before he enforces his subpoenas. The High Court has rejected the president's earlier claim of immunity from state grand jury investigations. In Washington, I'm Nathan Hager, Bloomberg Radio.
The former Minneapolis officer charged with murder in the death of George Floyd has posted bond and has been released from prison. According to court documents, Derek Chauvin posted a $1 million bond. Floyd, a black man in handcuffs, died after Chauvin pressed his knee against his neck for several minutes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Well, one of the most read stories on the Bloomberg, we're not going to do it justice because it's a fairly complicated look, although it's distilled down really nicely by Lisa Lee and Sally Bakewell about the leveraged loan market. And what's important to know is that there are rules as to how these transactions usually go, even in the world of distress where there's some sharp elbows. And the leveraged loan market has been very attractive, as many parts of the credit market have been, because in a world of low yields, this is where you can find some. But Howard Marks, well known to our audience, his Oaktree Capital Management, they participated in a deal for a restaurant supplier called Trimark USA that is rewriting the rules, and it's freaking some people out.
Yeah, because, creditors, apparently what we're finding out through this story is that there are some creditors that are more worthy than others, I guess, basically. And so it was a deal last week. It was a $120 million loan to cash-strapped restaurant suppliers. You said Trimark's USA. Not only unilaterally placed the new lenders above everyone else in the repayment pecking order, but it also stripped some of the older creditors of safeguards they had written into the contracts to protect their investments, according to those in the know. That is like,
yeah,
right?
I mean, and the thing that is worth reminding people about is that, these are all very complicated businesses, but you can really distill it down again to when something goes sideways, who gets paid first?
Correct.
And that's really what this is about. And the amount of risk you're willing to take and what you're willing to pay for something largely is based on, depending on how bad it gets, am I going to get paid or not?
What I love too, there's a line, we're talking about Howard Marks has long been seen as one of the more staid voices in a distressed debt full of pugnacious vultures. And so the fact that Oaktree is behind the most recent deal to upend the market only further serves to drive home the point that anything goes in the world of leveraged loans today, right? Anything goes, and however you can make a big buck.
Yeah, Pugnacious Vultures, name my band in college.
I like that.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks holding close to session highs. We're off the highs, but up nonetheless. Up by the most in more than a month right now. We've got the S&P up by 60 points. That's a gain of 1.8%. 1 month high for U.S. stocks. The Dow up 556, up by 2%. NASDAQ up 209, a gain there of 1.9%. 10-year down 16.30 seconds. 10-year yield 0.78%. Gold is up $8 the ounce now at $18.86, a gain there of 0.4%. And West Texas Intermediate crude down 1.7%, $39.98 a barrel. So stocks are pushing higher on renewed optimism that lawmakers could still reach an agreement on additional stimulus. Recapping, S&P advancing 59 points, up 1.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Let's check in with Rich Weiss, Chief Investment Officer of Multi-Asset Strategies for American Century Investments. They're looking after about $190 billion. He joins us on the phone from Los Angeles. Rich, we always like to check in with people who are outside of our little bubble here in the tri-state area. What's life like in LA right now?
Hey, it's all good here, Jason. Thanks. It's 70 and sunny. No fires nearby, no earthquakes, and I guess thankfully the coronavirus curve is flattened down here, at least for the time being. So no complaints.
Yeah, it's interesting how, I mean, it was really a worry spot there for a while, and then it was again, and now it feels maybe a little better based on some of the colleagues and friends that we're talking to out in Southern California.
Right. Apparently, the regulations put in place have tamed it down, and the yardstick I use is whether you're allowing us in New York again without quarantine.
Yeah,
California's off the hit list, so we're good.
Yeah, that seems like sort of a big deal. I heard from a number of folks who are consider themselves bi-coastal, and they were happy to be able to come back to New York again.
Yeah, that's a really good point. Well, please finish. No, please
I was just going to say I go to New York, frequently, occasionally to see my brother who lives out in Long Island, and I love my brother, but I don't want to stay with him for 14 days. So
right.
I'm glad we're off the list.
Exactly.
I hope your brother isn't
listening. But that really was the thing. We had a good friend who was from LA who was dropping her son off for college on the East Coast, and she ended up, having to figure out how to quarantine over here. It really does sort of change the equation. So when you think about that in the context of investing, I mean, there's a certain amount of sort of walk around, or in the case of LA, probably drive around economics. And, how does it figure into your view of the investing landscape right now, Rich?
Oh, sure. Right. The way we look at it, there are pretty much three primary drivers of the investment landscape for the near and intermediate future, right? At number one, first and foremost, the path of the trajectory of the coronavirus. That is the main driver, has been for some time, obviously, and will continue to be until number two, the discovery and broad dissemination of a vaccine. That's potentially another driver, at least the announcement of it. And then thirdly, putting them together, monetary and fiscal policy stimulus. That clearly in the near term is one of the biggest drivers, as we've seen today, for example. So it's those three items.
So where are you in terms of where we are in this cycle? And there are several, but they're all connected. Virus, economic, market cycle, political cycle. I really, it's safe to kind of pull a thread through all of them. So where are you? Are we on the other side of things, almost on the other side of things, or it's still a little bit fuzzy out there?
Yeah, I'd love to give you a direct answer, Carol, but my degree is in finance and econometrics, not epidemiology, unfortunately. So some of it is dependent on things outside, the science of finance. And but with that said, it's clear we're recovering here in this third quarter and likely continuing into the fourth quarter from the deep recession in the second quarter, slowly but surely. But the path of the recovery, and not to bog us down in that endless alphabet soup of recovery scenarios, but we're on the other side of the U, hopefully, or V shaped. We believe it's more of a U. But hopefully, if things go well, we don't have to face a W-shaped recovery. I believe the market was fearing another dip here, maybe not as severe as the first one back in March, but another dip, given the low probability of a phase 4 of a fiscal policy stimulus, which could throw us back into negative territory on a quarterly basis.
Because you're throwing out letters, and Jason and I love to talk about letters when it comes to the economy, does it matter to you? Because I think Mike McKee, who follows the global economy for us, very, very smart, but just kind of whittled it down and said when it comes to, there's kind of two different things going on. There's the economic cycle, right? Kind of, I think, right, Jason, he said that was the W potentially. And then we've got kind of a bigger, broader, when we look at the world, and that's the K economy in terms of there are some people who are doing just fine and some people are not. And we know Peter Atwater over at William & Mary has talked about this. Does it matter to you as an investor, I'm not talking as a human being, that we have the K economy continue? Because as long as the market and economic activity, generally speaking, bounce back, that's all that matters to the financial markets?
No, I'd say it's a good point because it matters very much for investors in general, we'd say. And the reason being,
I'm glad you say that. That makes, I'm glad to hear that, but go ahead.
It definitely matters. From a financial perspective, much less a social or moral perspective. And that's because the K-shaped recovery, if you will, this bifurcated recovery affects not only consumers in different ways, high-income earners versus lower, but also corporations. And so the evidence of that, or how it's manifested itself, you could see quite clearly in the divergence of growth versus value stocks, right, of tech versus some of the more, basic industrial stocks. And if the K-shaped recovery is to continue, which it is today again, if that's any measure, tech outperforming, growth outperforming, those companies that do well in this particular pandemic because they're online, because they're part of the new way of doing business. We are all familiar with the FANG or FAMG, however, whether you include Microsoft or not, the big five or so. They're doing exceptionally well in this particular economy and will continue to for the foreseeable future until we see our way past COVID.
Yeah. No, it's a really, really interesting point. All right. Rich Weiss, thank you so much. Nice to catch up with you. Stay safe out there in Los Angeles. Chief Investment Officer of Multi-Asset Strategies for American Century Investments. And as we said, he joined us on the phone from L.A.
Yeah, really cool, right? Interesting. I think it's things we need to think about, right? I mean, everything is connected, but it's not just about the stock market doing better, but it's really about lifting and getting rid of the inequalities that exist in our society. And I've had this conversation with my daughter about, the wealth gap versus income gap and why that wealth gap is so much more significant longer term.
Well, there's also, I think, a certain short-sightedness to it, right? And I think this is in part what Rich was alluding to, this idea that if you just focus on that top part of the K, you may be forgetting that, not you, but one may be forgetting that 70% of the economy is consumer driven.
Right.
And
what are you leaving out, right? What are you missing?
All of those consumers are, the affluent. It's a big country and a big economy. So worth keeping an eye on. All right, we're going to get you to the close of trading here on a Wednesday. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. A rebound for the U.S. stock market. The Dow, the S&P, and NASDAQ all surge, closing close to session highs. Folks from Charity Water ringing that closing bell. Stocks climbed to a more than 1 month high on renewed optimism that lawmakers could still reach an agreement on additional stimulus. Treasuries and the dollar fell. S&P gained after a barrage of overnight tweets from President Trump advocating a piecemeal approach. Yesterday, the president sent stocks tumbling by ending talks with Democrats. Speaker Nancy Pelosi is signaling openness to a standalone airline relief bill in a conversation with Treasury Secretary Steven Mnuchin today. Closing numbers, S&P up 58, a gain of 1.7%. The Dow up 529, up 1.9%. NASDAQ up 209 points, up by 1.9%. 10-year down 15, 30 seconds, 10-year yield 0.78%. Gold up 0.5%, 18.87 the ounce, and West Texas Intermediate crude retreated 1.7% to $39.98 a barrel on WTI. So an update today, a rebound. As for the economic backdrop and the shape of the U.S. economic recovery, Rich Weiss is the Chief Investment Officer of Multi-Asset Strategies at American Century Investments, and he was our guest moments ago right here on Bloomberg Business Week.
Hopefully, if things go well, we don't have to face a W-shaped recovery. I believe the market was fearing another dip here, maybe not as severe as the first one back in March, but another dip, given the low probability of a phase 4 of a fiscal policy stimulus.
Traffic at McDonald's is trending above 2019 levels in the afternoons and evenings, according to smartphone location data from SmartGraph analyzed by Bloomberg News. Shares of McDonald's up today by 2.4%. Recapping equities higher across the board, S&P up another 58 points, rebounding from yesterday, up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
With Carol Mazur and Jason Kelly on Bloomberg Radio.
All right, everyone. Wednesday in the books. Time to take a look at some of the movers and shakers on this Wednesday. Jason got a little nervous. What is she going to say?
Know where you're going there.
Oh, my goodness. Carol Master along with Jason Kelly. And, of course, joining us at this time, as always, is Bloomberg News cross-asset reporter Sarah Ponczek. She's joining us, too, on the phone right now. Quick check, though. Big picture, Charlie, giving us those closing numbers. This, too, I just want to mention a headline. Chevron topping Exxon as the biggest U.S. oil firm by market value. So some shifts there when it comes to market caps. Always good to kind of get a check on that. All right, S&P 500, big picture. Here you go. Definitely more of a risk-on trade today. 452 names in the S&P 500. Higher today, 51 lower. So, Sarah Ponczek, fairly broad-based today, huh?
It was. The reflation trade is back for a day at least. So yesterday when we spoke, that was after President Trump tweeted that he did not want to resume or complete stimulus talks. Then later in the day, we had a bit of a change in tone. He came out once again with a more targeted approach, saying that he does support giving aid to small businesses, to airlines, also sending out another round of stimulus checks. And today, we just see that original trade once again that is really counting on hopes of fiscal stimulus. So, as you mentioned, a very broad-based trade, but when I look at small caps, for example, up 2.2%. So pretty much well above the S&P 500. Also, you look at some of the best performing industry groups, autos, transports, retailers, many that are very economically sensitive. And actually, the Dow Jones Transportation Average closed at a new record high today.
Interesting. Yeah, I mean, it's fascinating that it feels like it's a stimulus trade at this point, but you know, one tweet, as you alluded to, and as you said, we were talking about yesterday, really turns it all off, and then like tweet, and then investors are like, cool, risk on, let's do this thing, like let's get after it. And I'm just sort of amazed at the sentiment, and you know, here we are 27 days, I believe, from the election. It feels like the next 27 days are going to feel like this.
They will. It's going to be a very long 27 days. I'm sure we all feel that way.
But one way investors are looking at this, I heard from a few yesterday, was that the sell-off was overblown because in some people's view, what they see is really happening here is that the market is actually pricing in higher odds of a blue wave and a Joe Biden win. Because what that could mean is you have more stimulus down the pipeline, say $2.5 to $3 trillion worth of fiscal stimulus that could come our way. For example, you look at TAN, which is that solar energy ETF, up more than 5% today. At the same time yesterday, we saw a record day of trading for bullish call options. So if you look under the surface and you look at policy implications, or if you look at areas of the stock market that might be affected by policy that would come about during a blue wave, we are seeing reaction, and that's why some investors are starting to say, no, if you look at the market, we could be seeing a pricing in of a blue wave here.
Did you see? Okay, I'm sorry. I kind of went down a rabbit hole here when you talked about small caps. They are up 62% from that March low. That is a huge bounce.
It is unbelievable. When people talk about what we have seen this year, we talk about this very narrow rally, and there is a lot of truth to that. We have seen the mega caps lead the way, but part of this is really because mega cap tech fell less on the way down, and then we have also seen an unbelievable rally since March. I look at the Russell 2000, for example, still down more than 3% on the year, which no is not a lot considering what we have seen, what we have gone through this year, but that compares to an S&P that is positive, to a NASDAQ 100 that's up about 30% or so. So we still see this very large disparity, even though we have seen a very strong pickup since that March bottom.
Well, that's what's wild. Like from the beginning of the year to about March 18th, small caps were down about 41%, but they're up 62% from that low. So you're right. Like they didn't go down. I mean, they've definitely outperformed what they went down. You know, it's just pretty amazing.
You fall more, you have way more to make up, and it's more difficult. And especially in the light and the situation that we've been in, where there has been so much uncertainty about the direction of the economy, COVID-19 reopenings. I mean, small businesses, especially considering the fact that a lot of companies in the Russell 2000 don't even turn a positive profit in normal times.
Yeah.
Right now, it's even more difficult for them and hard for investors to be positive, although we are seeing that tone change.
Yeah, exactly. All right, Sarah Ponczek, thank you. As always, Sarah Ponczek, cross-asset reporter for Bloomberg, our go-to for movers and shakers. Let's take a quick look at the VIX, down about 4.4%, closing at 28.19. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson. Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson back with us. Talk to us about your stock of the day.
All right, CRISPR Therapeutics, Jason. The company takes its first name from a naturally occurring genome editing system in bacteria. The company uses an editing process based on this CRISPR system to develop treatments for cancer and other diseases. Now, CRISPR Therapeutics was founded in 2013 and went public in 2016. The ticker is CRSP. Now, this year, the company's shares more than tripled from a low in March to set a record in August. After a pullback, CRISPR surged toward the record today, and the gain can be tied to one of the latest Nobel Prize winners, Emmanuelle Charpentier. She shared this year's chemistry prize for the development of genome editing, and this work led her to co-found CRISPR. The presentation of the award was well received. The company's shares rose 11.4%, the biggest gain since May. And it wasn't just CRISPR that was up either. I mean, Charpentier won the Nobel along with Jennifer Doudna, who co-founded another gene editing company, Editas Medicine. Shares of Editas rose about 8%. And a third company in the field, Intellia Therapeutics, climbed more than 13%.
First of all, Dave, très bien. That was just like incredible.
Well done, Dave.
You're welcome.
Thank you. That's very timely. And it's so funny that you, and I had not looked at the name of the stock that you were going to talk about. I literally was just reading Walter Isaacson's story about the two winners, and revolutionary, to say the least. And he's got a book coming out about one of them, Jennifer Doudna, who you mentioned, The Code Breaker, Gene Editing and the Future of the Human Race. Big deal. All right. Thank you, Dave Wilson. Let's get to Ed Baxter out in San Francisco. He's got World National Headlines. Hey, Ed.
Hi, Jason. President Donald Trump is back in the Oval Office. The reporter pool reports he's being briefed on the stimulus talks and Hurricane Delta. Early reports had said that he is COVID symptom-free. His chief of staff is Mark Meadows.
His schedule right now is fluid. We're looking at his prognosis from a health standpoint.
As for the stimulus, reversal from the White House after yesterday's cancellation of talks until after the election. There are no talks. There are now talks about much smaller targeted relief packages. House Speaker Nancy Pelosi on ABC says people need help now.
It's hard to see any clear, sane path on anything that he's doing. But the fact is that he saw the political downside of his statement of walking away from the negotiations.
So she says they will talk. Vice presidential debate tonight. It's on after Vice President changed his mind on plexiglass partitions. Bloomberg's Kevin Cirilli.
The stakes truly have never been higher for the Trump campaign that is looking to shift the trajectory of this race. I just spoke with Los Angeles Mayor Eric Garcetti, who tells me that he's been with Senator Kamala Harris in her deliberations, and she's looking to draw a stark contrast on how COVID-19 is handled.
Yeah, and the debate tonight, our coverage begins here on Bloomberg at 8:30 Wall Street time. By the way, Kevin has reported that in separate polls in two battleground states, Pennsylvania and Florida, Joe Biden has a double-digit lead. Dr. Anthony Fauci out in front and center on COVID. Again, remember his first predictions and how everybody said, no, it can't be that high. Well, now he has another one.
If we do not do the kinds of things that we're talking about in the cold of the fall and the winter, we could have from 300,000 to 400,000 deaths.
This is Bloomberg.
Ed, thank you very much. You are listening to Bloomberg Business Week. Well, certainly all eyes are going to be on that debate this evening, and you will want to tune in at 8:30 via Bloomberg. Another story that is among the most read is a company we talk about a lot. We also talk a lot about activism. Our guy, Scott DeVoe, he's always all over it. Well, Dan Loeb taking an activist approach to the Walt Disney Company, basically saying, hey, enough with this dividend. You got to invest heavily in Disney Plus because it's where the future is, man.
Yeah, exactly. So he's saying kind of, it's a way of preserving cash, right? In terms of, holding off on the dividend. So, yeah, it's interesting. And I think they've suspended it temporarily. Is that right? Am I wrong about that? I was just looking on the terminal here. Anyway, he's just saying basically to permanently suspend it. So,
basically, stop paying out, reinvest. And right. I think what is implicit here is this is an arms race in many ways, and you're fighting Netflix right now if you're Disney, and if you're the other streaming services too. I mean, Disney Plus came hot out of the gate. They have developed some great shows, and they have an incredible catalog. But I think, part of what Loeb is saying is in the short to midterm, Disney is not going to be able to rely on its theme parks and even theatrical releases. So the money's in streaming, and that's where you need to be headed.
This is why I was confused, because I was looking on the terminal for what the dividend was. And apparently they did not pay their dividend in it was a $1.6 billion dividend. They didn't pay it in July.
Right.
And their CFO was non-committal about future intentions when asked about the issue last month. So they've obviously been looking at it. But you're right, Jason. Well, first of all, they're in a tough place right now. Parks, in terms of revenue flows and money coming in.
They just laid off 28,000 people.
They just laid down, exactly. And so, and he's basically saying, okay, conserve cash and pump it into what are some of the newer businesses, right, that can provide growth going forward. This is Bloomberg Radio.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A more than 1 month high for the U.S. stock market on renewed optimism that lawmakers could still reach an agreement on additional stimulus. The S&P 500 index rallied 1.7% after a barrage of overnight tweets from President Trump advocating a piecemeal approach to stimulus. Again, the S&P up 1.7%. The Dow rallied 530, up 1.9%. NASDAQ up 210 points, a gain of 1.9%. The Dow, the S&P, and NASDAQ closing at or near session highs. 10-year yield 0.78%. Gold up $8 the ounce. That was a gain of 0.5%, 18.86 the ounce. And West Texas Intermediate crude down 1.7%, $39.99 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we have had dozens, if not hundreds, of, I think, great conversations across the course of these last 7 topsy-turvy, work-at-home months, but few have resonated with us as much as one of our early pandemic conversations with John Hope Bryant. He is the founder and chief executive officer of Operation Hope. He joins us on the phone from Atlanta. We met him in person about 150 years ago at the Super Bowl down in Atlanta. He's been doing some phenomenal work in the meantime, as he was before that, and he's got a new book. It's called Up From Nothing. He joins us from the ATL. John, really nice to have you with us. How are you?
Honored to be with you. We are, it's like you're right. It's like 150 years later, given how much the world has changed. We're sitting in a moment in history now, but history doesn't feel historic when you're sitting in it. It just feels like another day. But that doesn't mean the moment is not truly special. So I want to thank you all for leaning in and continuing to give people good information and content during this time, keeping them inspired and, feeling like they're in control of their lives.
Well, John, one thing, in saying that, I think we spoke with you in early June, right? And the world was reeling and shocked by what happened to George Floyd in Minneapolis. And so I have to say, I agree with Jason, like your conversation really stayed with us on so many different levels, and we've referenced it and repeated it several times on our air. Are you seeing anything out there that's progressed since then?
Yes, I think America's found her heart button. You can say you like what the protesters are doing or you don't like what the protesters are doing. But what you absolutely have to say is, my God, they have heart. And you can say you don't like what's happening with some of this candidate's supporters or that candidate's supporters. But my God, do we have an active democracy? And if this had happened in China, you disappear. If this had happened in Russia, you disappear. So that's sort of in the larger scheme of things. And then specifically, I like that when this whole thing hit, I got a call from this administration's Treasury Department, who I actually admire the Treasury Department. I have no problems with the other parts of the government, respectfully stated. But the Secretary of the Treasury, they called and said, John, we need help. We want to help small businesses. And so I helped them design parts of the PPP program in a week. Now, of course, we now know that 96% of all black businesses don't have an employee. They thought the banker was a bank teller and didn't have the bank relationship to get in line to get the money. And that's another problem we now have to solve. But I like that it was one government. It may have been for 2 weeks, but it wasn't Republican and Democrat. It was for 2 weeks. It was one America. And I like the fact that you have all these CEOs stepping up because the government leadership is unclear. And markets hate clouds, as you know, at Bloomberg. And you have these CEOs stepping up saying, knock it off, America. Let's stand up. And they're making commitments. I mean, real money. Some of it's PR, but most of it is real commitments and real money. CEO of Walmart, real dude. CEO of PayPal, real dude. Ladies and men, stepping up and doing real stuff because 90% of all jobs come from the private sector and 100% of legitimate wealth comes from the free enterprise system. So when they step up, it reminds me of the civil rights movement. It reminds me of what happened when we had our last, what I call the second Reconstruction. This is, in my opinion, the third Reconstruction, which is why this book I've got out now, Up From Nothing, is so important for this moment, getting our minds right. We need solutions that are larger than the problems that we seek. We need solutions.
And John, I'm glad you brought up the book because the timing is perfect in many ways, because I think we needed to be reminded in this pandemic. It's a moment of reflection for sure, and obviously the dueling pandemics that we've all talked about, and this national and long overdue reckoning about our history and some systemic inequalities. But one of the things you remind us about in the book is that you can reflect, but then you got to go do it. You got to get after it. And I do wonder sort of what you learned about or sort of relearned as you were putting this book together along those lines of kind of getting after it.
I learned that my gut instinct was correct on this, that even if you want to distribute money like a socialist, you've got to first collect money like a capitalist. I learned that this country was made from poor people, struggling immigrants from all places and races. And people today forget these yes, white, mostly white immigrants were not allowed into the office buildings, and they were not given business cards and salaries. And the last major protest we had like this was 100 years ago plus, which was the precursor to the New Deal. And these were all white people back then. I mean, folks protesting. I mean, the protests today look like kindergarten compared to what was going on in the early 1900s by all white new immigrants. And then they were allowed to come in to the economy, and they got the New Deal. And then later on, it was the new Marshall Plan. And these were government initiatives used to invest, not give away, invest in the population, which then created economic return for the country and a sense of fair play. So I was reminded that we are our worst enemy and our best asset. Everybody wants to be an American but Americans. But what's wrong now is our mindset. What's wrong now is that we're now pitted against each other. This is ridiculous. This only benefits China and Russia who want to be us. It's crazy that we've got citizen against citizen, Republicans against Democrats, a black against white, rich against poor, capitalists against working class. What kind of crazy mess is this? The Bible says a house divided cannot stand. That's biblical. And it's also common sense.
Right.
Yeah.
So, John, hang with us. We got to do some news. We're going to come back on the other side and talk to you some more. I want to hear more about the book and talk about some of the things that are going on right now when it comes to discussions about stimulus, the upcoming debate, and more. John Hope Bryant, he's going to be back with us in just a second.
All right, and for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you are listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is next. But, man, I'm looking forward to the second part of this conversation with John Hope Bryant. We hope you'll stay with us. This is Bloomberg. So I'm wondering what it says to us. All right, as you said, 1/4 of all homeowners who have demanded forbearance are still current on their mortgages. That's as of September 6th, excuse me. We got that from Mortgage Bankers Association. Of the 3.4 million households currently in forbearance, roughly 820,000 have not missed a payment. So they're saying this is a bit surprising. One of their senior VPs and chief economists did an interview with Bloomberg. We've seen that share come down over time because some of those borrowers have exited forbearance, and he calls it strategic, or maybe we're calling it strategic forbearance, with many homeowners taking on the option just in case. So maybe like you reach out and say, we might have to do this.
Listen, things aren't going great.
Yeah.
I'm sort of looking at the landscape. I'm looking at, my employment picture, whatever that is.
Yeah.
I'm worried about it. I want to essentially let you know, lender, that I may be in trouble here.
Right.
But in the meantime, I'm going to keep paying as long as I can. And listen, that's important. I have to say, good. That's what you want to see, instead of people being like, I'm out.
Yeah, exactly. And listen, there's, you got to remember, it's not just about an individual paying its mortgage. There's a whole investment financial market around this, right? In terms of, their package, they're sold, so if there's fallout, then it starts to have, potentially financial market implications. And so that's why we want to keep an eye on this. And listen.
Everybody thinks back to 2008.
Totally. And listen, we want to keep people in their homes because that's a better thing for so many different reasons, and we know that. So anyways, an interesting stat that's certainly picking up on this Wednesday.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on Citigroup shares after hours, down now by 0.5%. The Office of the Controller of the Currencies says Citigroup will pay a $400 million fine over deficiencies tied to its risk management and internal controls. Stocks climbed to a more than 1 month high on renewed optimism that lawmakers could still reach an agreement on additional stimulus. Treasury yields climbed, the dollar fell. 10-year yield 0.78% now. S&P up 58 today to 34.19, a gain of 1.7%. The Dow rallied 530 points, up 1.9%. NASDAQ up 210 points, up 1.9%. Gold up 0.5%, up 9.89 the ounce at 18.88. And West Texas Intermediate crude down 1.6%, $40.02 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, we're excited to check in with Scott Roston. He is the founder and CEO of Training the Street, because we want to talk to him about an acronym,
Yes.
which I believe I'm using that correctly. It's not an abbreviation. It's an acronym because we say it. SPAC. We talk about them all the time. Special purpose acquisition companies, blank check companies. They are all the rage. I feel very left out that I don't have a SPAC. I keep, proposing that you and I do a SPAC together, and you're not on board yet, Carol. But,
T-shirt
you
SPAC?
will be.
Yeah.
You will be. T-shirt SPAC.
I will be.
So, Scott, nice to have you with us. What's going on? Like, what precipitated this craze?
Well, first of all, it just reminds me of if this was in the late '90s, we would have been talking about .coms.
Totally.
The flavor of the year, if you will. I mean, look, I think first of all,
Is it that
obviously
questionable? And is it that headed to a bubble kind of thing and a burst?
There's a lot of excitement about it, and usually those don't end well. Because look, you have a lot of people chasing, with the herd mentality, a lot of people chasing, and there's a finite number of targets out there, but there is a growing number of hunters, right? And if there's the hunted are the same number, but the hunters are increasing, then there's going to be a lot more competition, which is going to, the way that markets work, as you know, it's going to drive prices higher. But not necessarily, because look, if you back up for a second, this is effectively a publicly traded play on private equity.
Right.
And so investors get excited about that. It does come with a big cost. The typical terms is that 20% ownership goes to the founders. That's why you want to be on the founding side, Jason. But there's a lot of competition for them, meaning that there's as of now there's nearly 150 SPACs out there looking for targets, and so they're looking for private companies, more usually the startup mode. But that's not always the case. But look, you could have a Nikola come out of this, or you could have a DraftKings, and DraftKings is a huge success, and Nikola's not. So it can be a little bit tricky.
And so, Scott, one of the other things that it reminds me of, and I'm glad you said private equity, is the LBO boom of 06 and 07, where you had a bunch of money chasing a lot of deals, a lot of big take privates. There seemed to be an unlimited amount of institutional money available and a lot of big war chests out there. And so you ended up with some bidding wars and some valuations that were eye-watering, eye-popping, whatever you want to say about it. How does the sort of valuation question play through in this case, in your estimation?
That I think is the tricky one. Look, everything you said is I think those themes are going to repeat from history, right? We are doomed to at least be part of those themes again. And this is something, as you know, we talked about before. We at Training Street specialize in teaching the fundamentals, the how to do the corporate valuation to primarily junior finance professionals. But when a SPAC goes public, you don't have any fundamentals of value, right? It's a blank check company. I mean, you're giving someone a blank check. So what are you betting then on? You're looking at who are the founders, what's their track record of doing past deals, what are their abilities, what are their skills, what's their unique skill set that they're bringing. Those are extremely valuable attributes, but they're intangible, which makes them very hard, if not impossible, to value through a traditional lens. So but then fast forward to so that's phase one in the IPO. But then phase two, which is really the value of the SPAC, is when they find the target and they then are going to merge with the operating company Now you have a valuation toolkit that you can use. Now you can look at the public comparables. Now you can look at some multiples. You might be able to look at their growth trajectories. You might be able to, if they're profitable and have cash flow, do a discounted cash flow analysis. Those items become relevant at the merger, but they're often of startup companies, which is venture capital investing, or again, are part of just a broader lens of private equity, which is harder to do. It's a lot about valuing on, or not even valuing, but a lot about thinking about market potential and addressable market size and looking at of those things, as opposed to getting and drilling down into what's the EBITDA valuation.
Right.
If these companies don't have profits, you can't really do that.
So, Scott, how
so
is
that
this
can be
different
tricky.
from a venture fund, a private equity fund, a hedge fund? Like, what's the difference?
Well, each of those are they might be under an umbrella of alternative asset management, but each of them are doing a little bit different things. If you take traditional leverage buyouts, there mostly are taking private companies using primarily amount of debt, hence the term leverage, and so those companies have to have cash flow to support that amount of leverage. So those are usually more traditional businesses. Maybe they're underperforming, and there's kind of a the analogy I often use in classes. That's like buying a home that's a fixer-upper, and you're going to buy it, you're going to improve it, you're going to renovate it, and then you hope that your neighborhood also is getting better over the next 3 to 5 years, and you look to sell it. That's a traditional leverage buyout. Venture capital, as you know, is more in startups. So that is going to be it's going to be less about technical fundamentals and more about potential and size, and think about how is this company going to be different, and how is it going to be how can they get mass and get scale. And then a hedge fund is just an investment company that may have one or more different strategies. So a lot of people kind of throw them around interchangeably, but they're really kind of completely different things. So this is more, in my opinion, more of on the publicly traded venture capital end, maybe later stage venture capital. But you can have a target like an UTS. That's 100 years. Many of us know it, especially growing up in the Mid-Atlantic or New England, living around here. We know the pretzels, we know the brands, and chips and the like. That's an established company, and now it's going to be coming public through a SPAC deal. So that is more the exception rather than the rule. The rule is going to be more of more of a newer startup technology company that's looking for capital to grow and is going to try to blow this out.
So, Scott, before we let you go, only got about a minute left here. Did this get so popular just because some of the cool kids were doing it, and so people are like, yeah, cool, this makes sense, and people have made some money, and as you say, if you're in the founder class, you get 20%, so what do I have to lose? Sure.
Definitely, FOMO and momentum is a very big part of the markets, which is, again, hard to measure, but that's going to be an aspect of it. And also, let's rewind back. It's been 6 months now, 7 months now that we've been in the pandemic. And remember back in March, April, what happened to the capital markets? Everything was completely blown up and disjointed, right? So, but you still have these companies that still, the private companies. So that pressure can build of like, well, here's a vehicle that we have. The SPAC's been around, and these vehicles then enable companies to still become public, but through the reverse merger process, as opposed to going public through the traditional IPO process. When you then have a DraftKings, there's going to be a lot of momentum that's going to I'm going to use the word draft, but it's going to draft on the power of the success of a DraftKings.
Yeah, interesting. Well, thanks for keeping us honest on this mega trend. We certainly are seeing a lot of it. Everybody's got a SPAC. You're not cool if you don't have a SPAC, apparently, at this point. Scott Roston, thank you so much, founder and CEO of Training the Street, joining us on the phone to talk about something that, I assume will be something that carries into 2021, unless it all ends in tears.